Hello, this is Jordan, and this video is being recorded on Thursday evening, April 28th, 2022. And in this video, I wanted to discuss the fact that we have two bearish developments for gold. I mean, they're not new, but they've been in place for a while. And yet, gold is holding up really well. And it's quite obvious when we examine history and other points where there are these bearish developments. So there's not a whole lot to analyze, so this should be a short video. Just have one chart here. We have the US dollar at the top, real 5-year yield in the middle, and at the bottom we have gold. It's a weekly line chart. The moving average is an approximation of the 200-day moving average. And so the two bearish developments are you have a rising dollar, a very strong US dollar, and we also have rising real interest rates, which have risen quite aggressively since November. And so I highlighted there the three periods where they were rising, lengthy periods, sustained periods, you could say. And for the dollar, I showed some lines on how it was trending during those periods of rising real interest rates, because rising real interest rates are the real driver. US dollar is secondary. Then we have gold at the bottom. And so we look at, let's go back to 2012. When we had that rise in real interest rates, as shown here by the real 5-year, gold declined 32%. And the dollar hadn't surged at that point. And then also, if we look at the 2017, or we could say 2016 to 2018 period, it was really the dollar. The dollar was declining in the middle of that, and that helped gold from falling further. But gold had two corrections, two declines there, minus 17% at first, and then minus 13% at the end. And more recently, and by the way, the rise in the real 5-year yield, I mean, at all three highlighted points, it's about the same. I mean, right now, we might have to go up a hair more to equal the rise during the other two periods. But we can clearly see, I mean, look, gold is only 7% off its 2020 high. And it's holding well above the 200-day. My guess would be it probably tests that at some point. You have the gap support down at 1840, and the 200-day is just below 1840. So look for that to get tested. But so at the same time, you have the dollar that's rising significantly. If you look at when the dollar bottomed, I mean, if we look at, I'm looking here kind of in the middle of 2021, there's a second bottom in the dollar. There's also a low in the real 5-year yield. And I mean, the dollar at that point from 90 to almost 104, real yields have risen, yet the gold price is actually a little bit higher. So any way you want to look at it, it's quite clear that gold is holding up incredibly well, considering first the rise in real interest rates, and then secondly, the rise in the US dollar. I mean, it did trend up with the dollar in 2019. I think part of the reason is we get this really strong dollar. It leads to problems around the world, also problems with the U.S. economy. So a rising dollar, while initially should be bearish for gold, it's going to lead to favorable policy for gold. And that's what we're setting up for. I mean, this is not 2013. This is more like 2018, where the Fed's hiking rates, they're probably towards the end, although they're going to hike really aggressively. And at some point, sooner rather than later, the Fed is going to shift course. They're going to have to cut. So that's setting up really well for gold. So, I mean, given these two factors, you think about it, gold is holding up incredibly well. It's still building, you could say it's building the handle on two-cup and handle patterns. And so that's another reason why I'm really optimistic. Once the Fed shifts, we're going to see gold rebound, and probably when the market sniffs out that the Fed is going to cut, gold is probably going to break out at that point. So this is setting up really well. But, we should note, obviously, silver stocks, exploration stocks, many junior stocks, they haven't held up as well. So it's fair to note that. But look, at the end of the day, they're all going to follow gold. Gold is going to be the driver. All these things are going to be flying higher when gold breaks above 2,000 to 2,100. And that is going to happen sooner rather than later for many reasons, but also for the reasons in this video based on how well gold has held up given the rising dollar and rising real interest rates. And both of those have been rising aggressively in the last 6 months. So, gold is another reason it's really well set up is because when gold is breaking out, it's going to coincide with the Fed, cutting rates. Real interest rates are going to be rolling over, going lower at that point, and the dollar later will probably, peak at some point and roll over. So then at that point, there's nothing that's fundamentally, there's nothing that's going to be able to stop gold. And technically, it's going to have this major multi-decade breakout behind it. So just think about those things. So obviously, it's been very frustrating the last couple weeks and, the last 18 months, but this is no time to panic. This market, it just needs a little bit more time, but it's getting set up for an explosive move higher. So let me know what you think in the comments. Really appreciate it. And look forward to posting another video for you guys over the days ahead. Thank you.